John Wasik, people don't normally think about John Maynard Keynes as an investor, but according to your great book, Keynes' Way to Wealth, he was a fantastic investor. Why does this get underplayed?
I think because most people look at Keynes, look at his economic theories, they look at Keynesian stimulus, they look at all the things that kind of get attached to the political part of Keynes. But Keynes was a fantastic investor and more people should know about it.
And in the book you talk about Keynes' way to wealth. Why don't you tell me how you get started on the way to wealth via Keynes? And don't start at number 10, which means drink more champagne.
Well, that's always a good place for a lot of people. But Keynes was a fundamental investor. He said, forget short-term market blips, pay attention to dividends, enterprise value, earnings, cash flow, management, all the stuff that Warren Buffett has been saying for years. But Keynes was doing this in the 30s, and it worked for him. He was a good long-term investor, very successful.
What was he holding back then, for example?
Well, he was big into shipping stocks. He was big into commodity stocks. He held oil, tin, anything to do with commodities. He sort of saw this demand shifting in the 30s to increased demand, and he went for that.
And how did he know when to sell? This is the hardest part of long-term investing.
Well, you know something? I didn't find a whole lot of sell slips in his portfolios, so I think he was a long-term buy and hold after the great crash of '29, and then he became long-term fundamental investor.
And how does his style investing, Keynes' way to wealth as you call it, differ from that of Benjamin Graham or Warren Buffett or any other great value investor?
Well, Keynes didn't really invent the math the way Ben Graham did, and he certainly didn't create the methodology for doing value, but he knew it intuitively. He focused on intrinsic value, and he focused on long-term buy and hold, grab those dividends, look at cash flow, very solid things.
And if you were to guess as to what Keynes might put in a portfolio today, I know he wouldn't put in Twitter or Yelp or one of those companies, but what would he put in a portfolio?
He would do some very boring things. He would hold railroads, he would hold shipping, he would do big old dividend pairs like Colgate-Palmolive, Staples, consumer durables, things that people don't even think are very sexy. Probably stay a little bit away from tech, but look, Warren Buffett owns railroads, he loves them. They're not going away.
All right, Keynes' Way to Wealth. Thank you, John Wasik.
Thank you so much, Greg.
Thank you for watching The Street.